when there's massive volume, especially way bigger than the previous days, like having a red day is usually not going to happen, at least in the morning, right? As you can see, AMC later in the day does go red. But so in the morning, I just totally ignored the volume. I just totally did not, you look at that and acknowledge that until it was too late. And so then we start squeezing over this previous high over the 140s or 1140s. So I just had to cut it, and I lose, about 2 or 3 grand right off the bat. And usually this doesn't happen to me, but all of a sudden I just got in revenge mode. I just immediately started revenge trading it, which is the worst thing to do. And I rarely ever do it. So when I do it, I get very upset that I even got myself to do it in the first place. Again, I just started shorting this spike, like waiting for a pullback, which is not a pattern, right? It's not a safe, extremely predictable pattern.
All right, everyone. Welcome back to This Week in Steady Trade. Jack Howard joining me again. Yeah, like today was just one of those days where the stock market gods came back and it was just crazy. Started out slow, and then the meme stocks that we will go over, they just took off both directions. So yeah, I'll let you boys take over. How are your weeks going? How's your mindset changed since the last episode? What are you doing?
The one day Matt has to go to the DMV when the market goes nuts. Yeah. That's how it works.
I gotta go to the DMV more, bro.
I know, right? So I mean, if you're from Texas, I mean, it's probably like this everywhere because of just COVID. Like I scheduled this appointment like 4 months ago, and this was the earliest appointment was today. So like it was like set in stone for 4 months. Sure enough.
Yeah. They
knew. They had my schedule.
The DMV called up the New York Stock Exchange. We're like, hey, we got him.
Pump it, dump it.
Yeah. Yeah. So I guess I don't say conflicted is the word, but March is certainly slower than January and February have been. But when it slowed down, I kind of got worried. Like heading into March, I got worried. I was like, am I going to have to start being conservative again in terms of kind of what kind of profits will I make? Like just reality wise, a reality check. Like, in a slower month, will I struggle more? How much will I make? How much will I lose? Because again, trading is uncertain. I just didn't know how I was going to react with a bigger account, more money, and off this amazingly hot market. And so, yes, we're slower, but again, from just experience growing on itself, from more money I have, I'm still been able to really do quite well, even in a slower market. And I say slower market, it's really not even that slow. It's just slower than February, but we're still getting good plays. A lot of OTCs have come back, especially today. NASDAQs have come back with the meme stocks, like I said, which we'll talk about. So this month so far is on track for, not my best month, but certainly another 6-figure. I think I crossed 6 figures today. So again, great month for something I didn't even have huge expectations for. Mm-hmm. So very, very satisfied so far with how I've been adapted and then keep pushing.
That's awesome. Jackery?
I think that, like Kyle said, it's not as hot as even December, January, February. Those are typically the 3 best months of the trading year every single year, just based on the January effect. Tim Sykes talks about that all the time. And it's basically just a lot of companies are going to start releasing news. People are going to start buying stocks. People are going to be, cold and home looking to trade. And that's just some reasons. And then on top of it, 2020 and 2021, like the other things that are going on, have even created more just insanity. So that's why we saw a lot of crazy months the last few months. Last month was definitely the slowest month I had seen probably since mid-November. And that was mainly just because everything was kind of pulling back. The OTCs, all the former runners that kept running, we finally stopped creating a higher base and re-breaking out. We finally stopped re-breaking out. We set the highs, we pulled back. So for the past week and a half or so, my go-to setup has definitely been the first green days on these former runners. A lot of them have been having like 3, 4, 5, 10 red days in a row, and just looking for that quick reversal. Been taking midday off a lot, and I've been able to make pretty decent profits. And this week we're starting to see just a little bit more in terms of like the meme stocks, they went on multi-day runs. We saw massive crashes and trifecta type moves today, which was awesome. A lot of people capitalized on that, including myself. And now we're seeing MAXD, OTC breakout, which if the last time I've checked, like we haven't seen liquid OTC breakouts with good daily charts in at least a couple of weeks. So it's nice to see an OTC breaking out. Hopefully there's going to be more to come. I just like adapting with the market, whatever pattern's hot, whatever's out there, I'm just going to look to trade. And then I'll just use my size based on how much cushion I have. Because that will kind of tell me how hot the market is. If I'm missing a bunch of plays, it's probably really hot. I should size up. Right now, I'm not missing a lot of plays. So I'm just using average size. And when the A plus comes around, and then I scale up a little bit on it. But other than that, that's all I got. Kind of a lot of rambling, but those are just all my thoughts.
No, I agree. The one thing I've been working on is like the reason we got into trading, like everyone, like at least is somewhat of a reason, is like just the balance, like to be able to be free to do what you want, like, you know, in the midday breaks. And like, that's what I've been like just trying to do, because for like 12 months, like it was 12 hours a day in front of the computer, and like it was the hottest market we've ever seen. And like, I don't regret it at all, but like, it does take its toll. Like burnout's a thing. And then like, just like your overall happiness. So like in this slow period, my mindset has been like, go trade the first hour of the day, the most volatile, like totally skip midday. And then I usually come back for the last hour. And like doing that, like, I mean, I have my DMV appointment today, which I ended up missing those trades, but like I haven't missed that many trades, just like skipping midday. I've made like basically between 7 and 8K every single day so far this month, which is just incredible money. Like flashback to a year ago, like that's a dream. That's like what I would have dreamed of. So that's kind of been my mindset, and it's good to just like refresh and like recharge. And if like duty calls and the market heats up again, like I will gladly sit in front of the computer for 8 to 12 hours a day again to just trade that madness. But for now, I'm just kind of trying to like get that like life balance back into the picture, especially as it just starts to become warmer and nicer outside, and just start doing some fun things, you know. It's my goal.
Yeah, still pretty cold in New Hampshire, so still being a degen, but if it was warmer out, I definitely maybe look to, you know, take off midday, maybe go for a hike somewhere, but still pretty cold up here, unfortunately. So I just gotta degen, no life, some trades until it heats.
You just gotta move out of there, man. There's other states with zero income tax, you know. Just letting you know.
I'll be on the move soon enough.
There we go. All right, Kyle.
Right on.
Pull up the charts, sir.
Let's get into it.
I didn't trade these much, and I missed the midday, so I'll just go over my thoughts, and then you guys can take over the real action. Right. So GME, if you don't know what's going on there, you're living under a rock, or like you're just totally new to trading, like I guess the last 2 or 3 days. But like like GME has been the talk of the town basically all of 2021. Like it even went to Congress. They like had a hearing about it. Roaring Kitty is like, I don't know, it's just been hysterical. But like this is absolutely crazy. And I tweeted about it. I was like, GME like is a unicorn. I don't know if we'll ever see this again. The stock goes from like near bankruptcy to $450, and then today it topped out at like 330 again. Like it's the most absurd chart pattern I've ever seen, but it's just so awesome. So when GME runs, all the other meme stocks that Wall Street Bets takes credit, but there's definitely a lot more going on in the background with all the hedge funds. But when GME runs, AMC runs, EXPR, KOSS, SNDL, NAKD were some others that didn't run so much this time, but like they're all just kind of grouped together and they like made their own sector. But my trade today was on EXPR because I really just didn't spike as much as AMC or GME. I didn't feel like it was as overextended. If you pull up a daily chart, this morning was actually a really nice breakout on it. So just like daily chart wise, my opinion, this was the cleanest one and had the most potential to like just run. So I was focusing on that breakout level over the, like roughly the 420s, 430s. So today we gapped basically to that level. we were holding it pre-market, like right near those highs. So I was watching it, and then right out the gate, it just based for like a solid minute or two. So that's where I started in on that action, because I was like, it's holding that breakout. And my risk on that entry was more or less just $4. It was just a starter. Immediately we got a spike, and then we pulled back, held VWAP. I sized in again, and then I sold some into the next push just because it wasn't as strong as like a high day break as I wanted. But then once we held VWAP 2 more times, I added those shares back on and just sold the rest into the high 470s. And at that point, that was my only trade of the morning. And I walked away and went to the DMV for the rest of the day. So I missed most of the other trades. But yeah, that was my single in the morning. Nailed, I bailed and missed some really good opportunity because of the Department of Motor Vehicles.
I'm not a good long trader for listed stocks. Well, I guess I shouldn't say that after today. We'll talk about it, but I just think it's so impressive what Matt does here with EXPR, and not only EXPR, but like all the longs he takes. Where, it's just I couldn't do this on the short side because it's just not as fluid for me. But it's like selling strength, buying weakness, selling strength, buying weakness, and you're using VWeb as that guide. As they keep setting higher highs, and it's just rinse repeat. It's obviously not that easy. Like, it's obviously Matt's taken hundreds of thousands of hours to get that point, but like just seeing it in hindsight, like how you just, it's easy in hindsight as well, but like it's just so efficient, I would say. Yeah, I don't know where I was going with it, but yeah, just awesome.
No,
I like that a lot.
Thank you. But that's a good point. And like when probably trading around a core is the best way to describe it. And that's like basically what I'm doing is, even though I didn't get huge size on that first one, I kind of basically got to full size on that first pullback. And then I usually would sell, a third to a half, depending on the spike into it, just to keep my lower average. And then when we pull back, on this one specifically, that double bottom there, like right at 10 a.m., that was enough to convince me, like, all right, like I'm pretty confident I can risk this level, because like at that point, either the morning spike has failed and the play is just over for me, or we're going to go higher. So that's basically where I doubled down. And I'm like confident doing that because I already did lock some in initially, even, I don't remember, but it was probably like a couple $100, like nothing crazy, but just like I have a cushion at this point. So I'm willing to size up, be a little more aggressive. And then I sold the rest. Yeah, just into that spike. But thanks for the compliment, Kyle. You're going to make me blush.
Right on. Yeah. I wish I could do what you do with as long, man. I can't. And Jack knows this. I've talked to Jack about this, where even with shorting, if I try to like really start picking tops and bottoms, like that aren't around necessarily in an extremely clear pattern, like obviously this was a breakout, but if I just start trying to like, pick places here and there, I just fall apart. I mean, it literally leads to me like shorting bottoms and covering tops, and it's all bad. So I usually have to, pick a risk, pick a plan, and just like sit, So anyway, it's cool, good stuff. All right, Jack, let's hear your take on these meme stocks.
All right, so let's start with GME.
Mm-hmm.
AMC, I just always avoid it for some reason, but GME, if you go back to the daily, I actually expected for some type of repump on this. If you know anything about the penny stocking framework, once a stock was supernova and it has a huge, pullback like this thing did with very, very little bounces, it kind of leads to a bounce. And I actually bought about 1,000 shares of GME down at 45. And then we got the little repump there that one day. And I just sold into the strength there. I really underestimated it, sold it at like $70 a share. And just looking at the daily chart, I was like, this makes sense to go to 220. Like I just looked at 220 and I was like, that's like a good resistance level. And of course, like that's where, now it went to 350. But just kind of looking at it, like this pattern kind of makes sense, and it doesn't really surprise me too much. Just based on how big of a supernova was, like people like this, they're gonna, buy it back. So that's where I kind of started with this one, and I did avoid it for I have avoided it for like the past like couple weeks, but today I got interested again. But I didn't get interested until the stock did something. And what the stock did was it just crashed right off high day. We kind of saw this kind of move on Tilray. The stock went parabolic 3 to 350 and it just dumped. So for me, I'm looking to buy the dip. And once these things crash, 50%, it's likely going to have a bounce. So what I was kind of looking for, and the idea was sub 200 for the entry. And that's just based on, I think it would be down enough sub 200 for a potential bounce. I know the breakout level is 150. So anywhere between that, 150 to $200 range is kind of where I'm looking for turns. I'm looking for volume increase. I'm looking for a halt up. And what we saw was the stock completely tanked all the way down. And we saw the first halt up, and I actually missed that first halt up, but we got a massive gift, and it halted down again, and that's where I got long at 193, and I was just risking probably 180 area, and then it halted up, gapped up, and just pushed 220s, 230s, 240s. I scaled out most right near the 250 area because that was the previous close, and I thought that would be met with resistance. Kind of made sense. 170, 250-ish sell, like a little bit less than 100-point bounce. I thought that was really good. Went up to 260, and then that's where then I started shorting the bounce because it went straight up, and I shorted the bounce. Got a really good entry at 267 and covered half into the first dip, and then the next half into the second dip, which was a really good cover because as you can see there, it wicked really hard. So I got out half at 225. I was really happy with that. And then it kind of came back, reclaimed, and I started shorting once again at 270. I thought it was going to roll over, and I did take some ads in that what I thought was a lower high down there, which was my only bad entry or exit on the stock. And I added some size on there, and then it went against me a little bit. But I was kind of using that $300 as risk until it confirmed a new level. So I added some more shares up at 280, and once it started kind of breaking trends down in that area, then I changed my risk to 285, and I basically just let it unwind a bit and took off most of my shares into that huge wash, probably about like 3/4 of my shares, and then I just kept the few shares on, which was just really dumb, and gave back some money. Ended up covering those once it was holding green. Should have just taken it all at 230, but since my position was so big and I had realized a lot of money on it, I just kind of wanted to gamble on some shares. So in case it went lower, I just held on to those. But the idea was like cover into that wash below green to red. So just something to note for next time, just don't get greedy. EXPR, I actually did end up longing that one today too, if you want to pull that up. I didn't see it at the open, but I saw a few people mention it. Roland Wolf mentioned it, I think, and he's always on this one. So I was like, yeah, I should probably give it a look with GME, at 300. And this just wasn't extended, as Matt said. So I ended up getting long on that first dip to VWAP at 430, and ended up being patient through the first perk. And then when it came back down and created that double bottom that Matt was describing, I then went ahead and added some more shares and changed my risk to the previous low. Not the double bottom, the previous low there at 420, 430. And then I only sold the third of my shares up near $5, and I held all the way through the poll with $4 risk. And then it spiked straight back through all the way to the new high day. And I thought, it's going to go to 7. It got all the pikers out and just dumped right off high day like GME. So I ended up selling it. Once it cracked VWAP and then failed the reclaim, I sold the rest of my shares for break even, and that was it. Made a small profit on it, but I just got too greedy on that one as well. And then the last one I was going to talk about was MACD. As I noted, first OTC breakout we've seen in a while. Kyle, if you want to pull up the daily, we just don't see these charts holding near their highs. This stock had a huge spike. What was that, 4 days ago? And they dropped some news catalysts. So I wanted to keep it on a watch in case it could make a base. So basically what it did was created a really nice bull flag pattern on the daily. So today it was my top watch just going into the day because it was the only stock holding near its highs. It had a previous news catalyst. It's not too extended yet. And once we started perking up now on the intraday, once we started perking up off that basing action yesterday, I started getting long at 0.008 and 0.009. And just looking at the daily chart, I saw that it still hasn't broken out yet really. And it has a good history of a couple day runs. So I ended up being patient pretty much the entire day. And I took some ads on it, just small. And then I pretty much doubled down near the close at 1.2 on that last dip. And that brought my average to just over a penny. So going into tomorrow, looking for some continuation with risk on probably the previous close because I don't want to give back my gains on it. So we'll see how that one does tomorrow. And that's it for me.
Right on.
I want to pass, like, we should have like a crown, the degen of the episode, like the degen king. And we'll pass it over to Jack today. Congratulations. No, I'm just kidding. Good trades, but you sounded like me when you were describing most of those.
Bro, I was being a degen on some of my trades today. Because that's
all good.
Yeah, you're stuck inside in that New Hampshire weather, man.
Uh-huh.
Get outside, so less degen.
So my trades on the meme stocks was quite rough in the beginning. So, and I'm actually pretty upset with how I was trading them. AMC, and unfortunately what got me kind of in this zone was I saw this weakness out of all of them. So like pre-market when we were selling off here, and here as well in AMC, I really got sucked in thinking, because some of these have been up for 2 or 3, 4 green days in a row now. So I'm just thinking, from a typical backside thesis, one of the first signs is like they're not strong pre-market anymore. So that really kind of caught me off guard. And so when we spiked on AMC over 11, I started shorting. And, I don't necessarily, there's nothing wrong with that entry per se, because I was risking more towards the pre-market highs. But the one thing I did ignore, which would have immediately told off the signs of that being a short, was the volume. You look how big the volume is out the open versus the previous day. Rarely have I ever seen a red day, at least unlisted, have bigger volume out the open and be a red day. Unless there's like dilution or something, which AMC, I believe there was, or there isn't anymore. But essentially just when there's massive volume, especially way bigger than the previous days, like having a red day is usually not going to happen, at least in the morning, right? As you can see, AMC later in the day does go red. But so in the morning, I just totally ignored the volume. I just totally did not, you look at that and acknowledge that until it was too late. And so then we start squeezing over this previous high over the 140s or 1140s. So I just had to cut it, and I lose, about 2 or 3 grand right off the bat. And usually this doesn't happen to me, but all of a sudden I just got in revenge mode. I just immediately started revenge trading it, which is the worst thing to do. And I rarely ever do it. So when I do it, I get very upset that I even got myself to do it in the first place. Again, I just started shorting this spike, like waiting for a pullback, which is not a pattern, right? It's not a safe, extremely predictable pattern. I do short parabolics, but this by no means was a parabolic, right? It was not a high odds play for me. And then again, we break over the high again over 1230. So I cut it there. It ended up being a huge stuff move, but I did cover there. So I covered the top. So again, lost more. So at this point I was down, about 5 or 6 grand on the day. And would now be my worst day of the month, which again, that in the big picture scheme is not that bad of a red day. Like that's the size I'm taking. That's pretty much expected if I'm going to lose 2 or 3 trades in a row. So it wasn't a big deal. It's just how I lost it was upsetting. The fact that I, shouldn't have even revenge traded to begin with. It would have been a much smaller of a red day had I not. But the best thing I ever did is I stay in the game, right? Just because maybe I traded poorly initially does not mean I can continue to trade poorly the rest of the day. Does not mean I can let myself kind of still continue to slip up. And usually I allow myself to do that over an hour or two, really to step back, relax, accept what just happened and move forward. So coming, and doing that was the best thing I had done. Because as you see, I've no idea why GME did this, but it really doesn't matter. The point is that it was happening. It doesn't really matter why, the fact that it is doing it. So when it did this, immediately my focus got right back. I came right back into the game. Missed the short on GME here, but immediately realized AMC was going to follow. So I did short AMC at 1150 here, covered it down near 10, then quickly reshorted it into the 11s again, and then covered again in the 990s. Then pretty much left it around rest of the day. Really nailed that short. That brought me back green on the ticker and almost up about 9,000 or so on that. GME, I don't usually play listed stocks long. But the very few times I do is when it has an extreme big panic like this. And the reason why they're so good is because I think we've talked about this before in previous episodes. The advantage and the inefficiency of when the stock starts to halt, especially when it starts to halt 3 or 4 times to the downside. Because as you can see, like GME never even got close to getting down to the 180s ever again. Like once it bounced, the lowest it got was like the 220s, and that's because just how inefficient this kind of a panic and this when these halts kind of create this panic, like people just want out. So when you halt it, it almost creates more panic of like I still can't get out. Why can't I get out? So every time it rehalts, eventually that panic ends. And when that panic ends, it then turns into extreme greed and it immediately flips on itself. And so that's why I did start getting long, like Jack said, almost same idea that Jack had with his. Missed this first halt up because it was so quick. But luckily, when they reopened it, they actually gapped it down a little bit from that open, or from that previous close of that halt. Got long here at 187, and then again sold it into the 240s, 250s there for my biggest long gain, I think to date, over OTC. So that's pretty impressive. I'm very, very happy with that. And then I did all same thing as Jack, shorted a little bit here, not reshorted, shorted a little bit here, shorted some more up in the 260s area, maybe one last add in the 270s, and then once again risking the 280s, and then covered in this wash here, covered it all at 230. We was really happy about that cover in hindsight as well. And yeah, turned what was a really shitty morning into a really, really great day, just by staying focused and not letting previous losses hinder me too much from future plays. So
awesome. This is a good episode. There's a lot of good lessons on this one.
I'll have to watch it back. I tend to forget what I said. So watching it back is always helpful for me as well.
Yeah. Good trades, guys.
And then I guess one last play here was EYES. I guess technically I traded it today, but I almost don't even count it because it's just, yes, I should count it. But if you've seen some of our earliest episodes back in like June or July of 2020, I talk about how I hate overextended gap downs a lot, simply for this reason that I just don't ever get any size. So like I really didn't have size to make this meaningful, because it just gapped down too much, So when we open and we're down from 13, we open at 13 and we go from 15. Like it's very hard for me to short some here and thinking it's a good risk reward trade if I want to risk red green. Now in hindsight, it's like I don't have to risk red green. I can risk 13.50, but it's like, again, I don't know that in hindsight. So covered the few hundred shares I had down in the mid 11s here. Goes even lower. But I think something to note and something to go forward with as to why I might want to be more aggressive on maybe certain overextended gap downs. Like a learning lesson for me is that when we have NASDAQs like this that run up, from 170 all the way up to 20, I mean, that's 1,500 to 1,000%, even 2,000% per run. To think you're not going to pull back 30, 40% on a red day, like that makes sense. So the fact that we did, even though we opened up at 13, we were only down 10, 15%, so maybe a future lesson I want to keep for myself is that we will be down 30%. So I just need to take a little bit more size, be a little more aggressive, kind of maybe have a tighter risk level, kind of assuming or taking those odds that it won't break back to red green at all for being so overextended. But on the flip side, like if it's a NASDAQ that's only run up like 200% or 100%, then yeah, those overextended gap downs I don't want to chase because, it's only going to go down maybe 10 or 20% on the day, but again, like when we're up 1,000, we could probably see those 30, 40% down days. So that's just something I need to adapt to for future plays and be more aggressive, even when they do gap down a lot.
Beautiful. So you need to watch it back. You're just like, you're talking to your future self. Like,
You're right. Yeah.
You for when you rewatch the episode. You know?
Yep.
All right, everyone. Thank you for joining us on this episode of Twist. I believe this is going to go live Thursday. Tomorrow, I think that's when your room, like the special pricing closes. So make sure you check it out. There will be a link in the description below. Breakouts, breakdowns. Kyle and Jack teamed up with StocksToTrade. So make sure you check that out. And thanks for joining me. Great lessons today. Pretty awesome day in a rather slow market. So we do this every week. Make sure you like, subscribe, and that's all we got. So cheers.
Later,
Later, guys.
Peace.